How's it going, lads and lasses? Welcome back to the March 2024 updates to the Online Trading Journal by myself. This will be our kind of review of trades that I took in March 2024 on my journey to pass a funded account challenge and just start trading for real. Please read this disclaimer and disclosure. Everything I say in this should be taken in light that this is for paper trading purposes only, and past performance is not indicative, nor does it promise future profits. Let's review my agenda for today's video, which is the trading goals, my trading model, a review of the month, and a commentary on my performance. So again, my trading goal is to pass a funded account challenge in which I need to make a profit of $3,000. My goal or target is to get more than or equal to $500 a month using the E-mini NASDAQ 100 Index Futures contract. And I typically will only use one contract for this endeavor. You'll see throughout this month that sometimes I have used up to three, I believe, on trades I was either averaging in or getting a better price for, and for it to eventually hit my contract, netting me more than $50, which is what my daily goal is. So using this profit target of 500 bucks a month, I reckon that maybe out of the 20 trading days in a month, I only need to make 25 handles for 10 of those trading days to get 500 bucks. And yes, my personal favorite model again is the 2022 model technique, where you look for rate on stops, you look for a short-term break in market structure or market structure shift, leaving a fair value gap in the lower or upper 50% of that impulse leg. And then the exits are going to be logical exits, either discount PD arrays or premium PD arrays. Psychology and lessons of this month is the same as the past, which would be following my own set rules related to time first and price secondly. And patience, again, is another lesson I had to relearn this month, and probably one that will take me a couple more months to learn, but patience, the most important key, as that is to wait for the highest probable entry. So let's review March 1st, Friday. That week was the end of February's trading, and we generally had a pretty bullish day, if I can recall correctly. It was going up hundreds of handles that day. In this particular trade, I opted to go against the bias for the day, which is extremely bullish, and I looked for a selling opportunity in the lunch hour or lunch session. So here you can see that we had rated liquidity there with these candles, and I was anticipating some sort of retracement back into this fair value gap down here where we had a short-term shift in market structure. And well, that's not much there is to say. Um, I think this is on a 1 minute chart. I anticipated a move lower right around here, about 11:50 is right there, so close to the 12 o'clock hour. I got in at about 2:38, so here you see the 20% retracement from this low to this high. So I got in about the 20%, and I wanted to aim for the relatively equal lows, what I call a minuscule sell side liquidity pool, before price would ultimately come back into this fair value gap and continue the bullish objective. So that's what I did. I sold short somewhere around here. That's 1241, so I probably got in at this candle or so. I saw a nice big break below a relatively equal or a swing low here, so market structure shift, short term, entered on the retracement up into it, about 50% there, so maybe on the tail end of this candle here, or there's 1238 right there, so yeah, about halfway there. Took some heat, but ultimately it went to my first objective here, which was the minimum sell side liquidity. It hit it, and I was out. That's about 15 or 13 handles. And then I just stopped trading for the rest of the day, and I watched it respect bullish PD array here below the 50%. That's kind of what I was aiming for in this model. So below 50% sell side liquidity, boom, hits it, and it continues down to the 60% retracement level, optimal trade entry into a bullish fair value gap, and I think that's an order block. So that was a high probability bullish time to enter as well. I just opted to take the opposing side for it. That's just what I saw at the time, and it continued going higher. So I only got one trade for the day on March 1st. It was very risky. We came out on top, so not much that there is to say about that. All right, March 4th, which is the first Monday of March trading. I saw a simple 2022 model in the lunch session, and what I was going to say in the previous slide, but what I didn't, is that I have off days. So my off days are Mondays and Fridays, where I'll really just try, instead of get 25 handles, I'll just try and go for 12 and a half or so if possible, 25 bucks, since I'm not really following my own rules of staying on Tuesday, Wednesday, and Thursday. If I trade Monday and I trade Friday, I'll just try and hit a $25 target. So in this instance, we saw price leg go up. I think 50% near where my line is here. So I saw a runch raid on liquidity, a break below this swing low. I entered on this retracement here, 1325, really solid, pretty much at the top of the wick there. And then I was just aiming for these relatively equal lows right here during the lunch hour. I don't know if this came all the way back into this fair value gap right here. It might have, but that wasn't my goal. So I watched it come down, give me a little bit of a worry at the retracement. I thought I should have just done the 50% from here to there, and that would have been the liquidity enough to exit. But I held through it, and it hit my target, and I watched it reverse and go up more. Okay, March 6th was the next day I traded, and that was the non-farm payroll Wednesday. Now, this day I had made a terrible mistake. A, it was trading on the non-farm payroll. B, I had accidentally entered into a contract with the 20 of the regular E-mini instead of the E-micro account. So my leverage was extreme, and I thought I was going to blow the account on this day. Luckily, my bias and my intuitions kept me straight, and I was able to, well, you can see here, I bought at 244, which is damn near the top of here, and I watched it go all the way down to 123, so that's just a loss right there. I watched it respecting some fair value gaps it made early in the day, so I'm like, okay, might be a good time for a buy then, or a sell, I mean, because I thought I was going to disrespect. So I sold down here, and I watched it respect it, and it went all the way up to 118. Now I was extremely in the red here, but I just thought that I knew it had to go lower. Yeah, I knew we had validated a higher time frame inverse fair value gap, which is this giant um, orange rectangle up here. Higher time frame, 1 hour positive fair value gap turned bearish. 1 minute fair value gap turned bearish. So I today this day gave me a lot of trouble trading wise, and fortunately I was able to make $80 on the day, but that was because I had trailed my stop losses very tight, very tight. You see, I bought one here, down here. I think that was just a partial or below this low here, just to get me out of the trade because I was having such a crazy day. And I think I placed my stop at 81. Yeah, just a little bit too low here. 81.50, 81.75, just below, above the true retracement here. So crazy day. I can't really remember. Just don't trade non-farm payroll, man. You will get burned. Even with clear setups, it can go crazy. Like look at all this fair value gaps it was creating and just working all the way through. So not high probability when you have too many um, setups like that. Yeah, here I didn't close with $200 plus on profit, which I think was down here. That was me being greedy. I had 3 contracts. I should have closed. I bought one, moved my stop, took my stop out at plus 80 on the day. Not an entire loss because we took some profit, but I left a lot of profits on the table, and I just didn't follow some rules. So, uh-oh. Oh yeah, so here I was, don't know what day this was. I think this was the Asia session. I had just happened to be up early in the morning or late at night, and I just want to see what I could get. Let's see. So I lost 20 bucks here. So this one I kind of was anticipating a run lower in Asia, but what I didn't realize is that we had kind of a sell model, buy model going on. So here's the consolidation. Here's the run up above those highs, but then here's a higher time frame objective. What I didn't realize is that after this consolidation, it broke a swing high, so the bias was then bullish, which I should have recognized. So see, as it broke this high here, it should have been bullish, but I didn't see that. So just $20 loss. All right, March 7th, Thursday, after non-farm payroll. I think Fed Powell. Yeah, the Fed Powell was speaking. Red folder event. Told myself I was done trading on farm payroll week, but yeah. So the first week was really crazy. So I was waiting for a setup to occur. I thought this was it. Turns out it just retraced into this fair value gap here, an inversion somewhere in here, maybe a balanced price range, and just kept going higher. So I just took a little loss right there. I don't think anything really else happened during that day, but account balance at 450. First week of March. All right, here's the non-farm payroll lunch PM session. Again, I can't follow my own rules. I said I was done trading, but guess I wasn't. And here's where I started to think about balanced price ranges. So here's that little impulse retracement leg here during the lunch, 11:30, 11:50. And it made a fair value gap here. Let's see, I thought it was going to go higher, so I bought it. I was wrong, so I sold it. And then once it broke that, I realized, okay, perhaps we're going to go lower. So I sold there, watched it drift down, came back up. I sold again, holding firm to my bias, and it's just given me another good entry point. And the last time I sold, gave me a really good entry point, and it went down, and I just bought below this low here to exit one of the conditions, gave another chance to buy, and it didn't really want to go lower at all. And at this point, I had moved my stop from I think above these highs to above this high. and I watched it just come and retrace and take me out before deciding to break these lows with some energy and just go lower for the day. So, I got stopped out and I said, no, this thing's definitely going down later in the day. So I sold again one last time here just for one because, I'd already increased my risk by a lot here. So I sold one here and then it went to my profit target of 18068. So it's about 100 handles there, 90 handles or so. And that really brought up my account balance a lot. I think this is the singular time where it made up for the one day it made up for half of my monthly goal. So I kind of take a back seat. So see, I see this is a balanced price range, this fair value gap here and this fair value gap here. I need to explore what that means a little bit more, and I also need to work on my stop losses, my stop loss placement. Feel free to read what's in red. Oh yeah, I thought that today would go all the way down to 18018 for the symmetrical price swing of this. It's a little bit further down. That was my bias, that was my long-term goal, but because I had just been really risky this entire week, I saw a big gain. I thought, enough is what I have. So I think in the next slide we can see that yes, it went all the way down to 18018 and even a little bit further down. So I entered up here. One of my first exits was down here. So we made this fair value gap into an inversion fair value gap, and during the PM session we retraced up into it, respected it with the wicks even. That was another opportunity to sell short, but I was already out of the market at this point, and I watched it go down to my price target. So here's my exit. At some point during the retracement during the lunch, and it went all the way down to 18. So that symmetrical pricing from this is actually this right here. So interesting to see, filled in this fair value gap as well. So if I just held and I waited, right, for time, I could have gotten a great entry, secondary accumulation distribution. So first week of March lessons, boundary conditions for trading decrease risk and enhances probability of profit. So I got to keep within my boundaries if I want to be profitable. Avoid non-farm payroll weeks, pretty much. And also avoid end of quarter weeks, like we just had this past week. Let's see, look for the higher time frame draw on liquidity. Frame the higher time frame PD arrays and what price is reacting to. The space between may have a setup, but if it is outside the correct time, then it lowers the probability of profit. Restrict myself to the boundary conditions yet again, and then I need to leave one on to see if it will go to a confluence level. Hard to do when you are trading with only one contract. So let's see, week start, we started with around $50,400, and by the week's end, we had ended with $50,730. So profit of 330 bucks for the first week of March. Not pretty freaking great, but sloppy trading and bad adherence to the rules. So here's that Monday. There was no news on Monday. I didn't take any trades on Monday. And CPI Red Fuller event was the next Tuesday. So great. I adhered to my own rule. Don't trade on Monday because look what this gave me. No setups whatsoever. Great. Thursday that week, I got to trade again. So let's see. Greed. Yes. So I sold at some pretty sloppy levels. I should have waited for the. So here's that break in market structure right here. There's a fair value gap above 50% of that swing here, so this would have been the most optimal entry for me. But it looks like I entered in very early in this one and into this orange box here, which I think was some sort of fair value gap turned inverse. So sometime during 12:30, it retraces into this top level and rejects, so that would have been the ideal entry. And let's see, I got stopped out here at 12:47. So yeah, it looks like I had left about 30 handles on the table from 276. So yeah, I just thought I was going to keep on going lower, maybe take this AM session liquidity down here in this green line. It might have happened, I don't know, but I got to learn if I have more than one contract on. I should just take my goal of 25 handles and 50 handles and be content. I didn't. I was practicing stop losses to see if it could hit my higher time frame. Target, it didn't. I got stopped out, left some money on the table. We're at 830 bucks on the month. March 15th, that Friday, the attempt at the TGIF model. Again, leaving profits on the table with greed. So let's see what I was doing. I bought one and I bought at 44, sold at 36 for a loss. Saw it was rating and shifting, so I bought at 49, and I was aiming for this red line up here, and it didn't give it to me. I think I was aiming for the 20% retracement level, I suppose. I don't know where that is. But the run I was expecting happened at 3:20, so later in the day. So it did go up against this red line, but it happened at the 3 o'clock hour. So time. Had a really good first entry at 2:20. So there's 2:20 somewhere here. But okay, let's see. 8:38, 8:29. So we made like 10 bucks. This is just a lesson to say, you know, choking yourself out with stops will wreck you. Will leave profits on the table. And if you see profits, like I should have seen, just take it. So here's 49 all the way up to 90. That's 50 handles. I should have taken the exit up there, but I trailed my stop. That's what happened. I trailed my stop. That's why I sold here. Bought another one here on this what I thought was a balanced price range, and I sold it at 53 because again I trailed my stop. Reaccumulated. Bought at 160 and just thought, I'm done for the day. I don't think this is gonna happen, but it did. All right, March 19th, Tuesday. Tuesday we had no news, and we had plenty of red folder events later in the week. Um, Looks like we got 50 or so bucks this time. A little bit of psychology and price action. Now I wrote all these red notes for me just to refer back to later, or just to kind of inform you what was going through my mind. So we bought down here at a fair value gap, an hourly, really respected. So really good entries, and it looks like I got stopped out here. So unfortunately, I saw this as a fast retracement, so I'm like, no, this is going to reverse on me, so I got out at about 20 handles there. But then I realized that it was just retracing into this fair value gap here after taking out this swing high. So, oh, that's my model. So I bought in again at 160, probably above this 50% line here. And quickly just decided to exit again once it got up into the fair value gap because it rejected the first time. So I thought, okay, it's just going to go a little bit deeper and then reverse on me. But it didn't. It went up to the 50% line and then kept on going up. So I think my target would have been the midnight opening, which is this blue line. So some more lessons, but model's still there. So here, breaking market structure right here. Energetic-ish, retraces into the 50% fair value gap here. Good buys. Sell above this high, or sell at the opening price, or sell at the higher time frame consequent encroachment of the fair value gap up here. And note here that this would have been a 100+ handle trade. Yeah. So had I held on for a little bit longer throughout the day, it would have been a 100+ handle trade. Interesting. Yep, and here it is later in the day. Where I thought it was going to go would be the Asia highs, and that's exactly what happened. There you can see down there is the entry. Multiple high time frame PD arrays get filled in and take out liquidity. Entry was in this one here. Alright, March 25th, Monday, pounding lessons into myself. Stop loss placement is the next area of improvement. Yep. So here's 11:10 and 11:40. Took a bunch of trades that just weren't working out. It was chopping me up. My stop losses were just killing me. So I just decided to wait, break a mark structure here, retracement into this fair value gap. I thought I was going to buy it. I did. Kept taking liquidity. Held on to this for a long time. It was just like 12 o'clock all the way over to 125. Long trade to be in when I could have just waited for the right time. So had I come back in the day, maybe say 1 p.m., I would have seen this giant fair value gap right here. And this shift in market structure, this retracement, bought that. Or just wait for it to come down and fill it in and buy the bottom. And then watch it run higher to take out this buy side liquidity up here. Would have been nice. And that would have been my target, was the Asia highs, and it took it later in the day, PM. But it looks like I just opted to sell for some good profits here. So let's see, at this point the equity was almost $51,000. Really good month. That was Monday. Thursday, like I said, end of quarter. Just I'm not going to bother with end of quarter days after Wednesday. I think that's just not for me. So I bought one here, anticipating a run higher, and it just went against me. So saw a discount price there, bought it, and stop loss placement took me out, ending with 50.96. And lo and behold, I was actually right that it would go higher. So I was a little upset to see that, but again, it's just I have to wait for the right time. So my stop loss was initially below this low here, and after buying into here, I expected it to go higher. I watched it go lower, so I bought again. I moved my stop. Where did I sell it? 50? Yeah, so I moved my stop below 50% of this wick, and it came and took me out, and then it decided to run. So unfortunate for me, but the lesson is that I'll just keep my stop wherever I place it first until I see about 50% of my target level reached, and then I'll move it 50% up. So then I could have moved it there. And then at about 75% of my target being reached with price, then I would have moved it to break even. So I'm just really choking myself with these trades here. Yeah, so feel free to read. I don't need to read for you, but my bias was correct. And I'm finding that out to be true a lot. I just need to wait for the right time. Sometimes it's at 3 o'clock, sometimes it's at noon. So it just depends. And here's that monthly review. So we're up about 500 bucks. Perfect. It's what I wanted. It's what I got. Choppy consolidation action here. So what do I see in this monthly 1 hourly chart? Well, I see Monday, March 1st, we made that high. Tuesday, we made the retracement low. March 5th, the next week. Does that make sense? March 5th. This should have been Friday, March 1st, not Monday. Retrace, short-term shift in market structure. Retraces into the fair value gap down here in the hourly. Really rips higher, aiming for these highs up here. So that would have been a really great trade to take on the 7th there. Interesting. Good seeing this on the hourly chart because this really gives me an idea about higher time frame PD arrays being utilized to go higher. So yeah, check that out. We made a short-term high right there. We broke it. We traced a little bit into there. Not really a discount though, so we watched it go all the way up. And on the retrace, we watch and see if it goes to this lower one. And if it does, that's a good sign that we're going to go way higher. So here's some accumulation, manipulation, right? I think this is manipulation, price manipulation, reaccumulation down here by that fair value gap here. What would that be? So it's about, let's call it like 18180. And we'll sell up here about what? 18600. Damn. Yeah, could have been a monthly salary. Maybe even a yearly salary if I had the right contract size for this run here. So then, what do we see? Retracement leg down here is probably CPI or something right here to get into this fair value gap. Broke this. 50% is probably around here. Take that, buy it, run buy side up here because we haven't hit those yet. Really start to break down here and go lower. We have not come back into here after this break of a short-term low into this, so 50% of this, maybe 25% or so. I have to see, maybe on a 45 minute. We trace back into it because we didn't take out this low. Probably sell short somewhere in this PD array. Watch it go lower. And then, what is this? This is Wednesday. This would be Thursday. Sell into that. Friday. Take it. Retrace. Market structure shift, bullish. Wait for the retracement lower somewhere in here, maybe to an order block, which would be that bar candle there. Yep, totally does it. Goes higher. Another market structure shift. Retraces once into this higher time frame PD array, then takes out the highs again. So it looks like it's the second week, or I guess the first full week, I guess. There's a run on Tuesday, Wednesday, Thursday. Second week, or I guess first week Thursday, there's a big run. And I guess that Friday. Then the third or fourth week, there's another chance to get a really big run higher here. Take out these relatively equal highs. Now, just looking at this chart, I still think we're pretty bullish. We've had a lot of shifts in market structures here. This is another shift in market structure, so this would be the impulse leg here. Let's see. We could retrace down here to the 8200 levels. Or maybe just hit this order block right here as a place to come back to before continuing higher, because these aren't really, these are pretty smooth, I would say. So I still think we have some ways to go. There's a really energetic move above this intermediate term high right there, and even above, I guess what you would call this intermediate term, short-term high, short-term high, intermediate term high. So yeah, overall I think we're looking at April to be a bearish month. Sorry, bullish month in April. But we'll first have a retracement, of course, maybe below this low or something, just to take it out. Don't know if that would happen. Maybe it looks like there's some sort of relatively equal lows going on down here, but it's a consolidation, so we'll just have to see. Lessons to take away from this month of trading. I need to work on my stop loss placement. Need to grow in that aspect. I need to not trade without a clear setup and avoid red folder events like FOMC, CPI, and non-farm payroll. I need to identify a higher time frame direction and trade only in that direction. So for the month of April, I think I'll be trading bullishly. I will also be working a lot, so I might not be able to reach my $500 target profit, but perhaps trading the second week of April and the third week of April, I will be able to find real runners if I just scope out the 1 hour charts long enough. Uh, I hit my goal again this month, so 2 out of 12 months, let's go. Really happy about that. I don't need to increase my risk unnecessarily with multiple contracts. I think one contract for this model is enough for me, and it would really help me a lot if I can just really solidify my stop loss placement with just one contract. I need to take my profit target goals without hesitance. I see 25 handles, I'm going to take it. But if I think it can go a little bit higher, I will leave it on and see what happens. And that's when I'll work on my stop loss placement. Yep. And also knowing when you can give your trades undivided attention. So like I said, I am going to be working this month, all of this month. So if I can't give my trades my attention, maybe I just won't trade. So perhaps since I'm working this month, my goal will be $250 and work with that. All right, I appreciate you all for watching and tuning in. Have a great April, and I hope your March was good for you in trading as well. Until next time.